All right, so today we're going to tackle a word you hear literally everywhere. I mean, it's a force that shapes our world, from Wall Street all the way down to your local coffee shop, capitalism. But what does it actually mean? And, more importantly, why does it look so incredibly different depending on where you are in the world?
It all really starts with a bit of a puzzle. Think about this. We use the same word, capitalist, to describe the economies of the United States, Sweden, and China. But these places operate in such fundamentally different ways, right? So how can that be? Well, the answer is that capitalism isn't some rigid one-size-fits-all system. It's actually a whole spectrum of ideas put into practice.
Okay, so to make any sense of these variations, we've got to go back to basics. We need a really clear starting point. So let's break down what capitalism actually means at its most fundamental level.
So, at its absolute core, capitalism, or as we say in Nepali, Punjivad, is an economic system built on a simple idea: private ownership. We're talking about individuals and businesses owning things like factories, technology, and land, the means of production. In a system like this, it's the free markets, all fueled by the drive to make a profit, that pretty much become the main engine for deciding who gets what and for how much. And this whole system really rests on four key pillars. First up, you've got private ownership, people owning stuff. Second, there's the profit motive, which is what really pushes people and companies to innovate and create. Third, you have competition, which in theory helps keep prices fair. And finally, there's this ideal of a limited government role, where the market, not the state, is supposed to be the main coordinator. This idea is perfectly captured in a famous quote from the guy often called the father of modern economics, Adam Smith. He basically said that it's not because the butcher or the baker are nice people that we get our dinner, it's because they're looking out for their own self-interest. He argued that when everyone does that, this invisible hand kind of guides the whole market to produce what society needs. It's not magic, obviously, but it's an incredibly powerful and influential idea.
But capitalism didn't just appear overnight. It's evolved over centuries. It kind of grew out of mercantilism, where nations were all about hoarding gold and wealth. Then bam, the Industrial Revolution came along and just supercharged it. After World War II, things got a bit more regulated with Keynesian ideas, government spending to keep things stable. And then, starting around the 1980s, the pendulum swung back towards deregulation in an era people now often call neoliberalism. The main point here is that it's a dynamic system. It's always changing.
And all of that history brings us to a really crucial point. The pure, textbook version of capitalism, it pretty much never exists in the real world. Seriously. Instead, what we actually see is a whole spectrum of different approaches. So on one extreme end of that spectrum, you've got this ideal called laissez-faire. It's a French term that basically means let it be. It's a vision of a pure free market with almost zero government interference. But then on the other side, you have the reality for most countries today, and that includes South Asia, the mixed economy. This is where you blend free markets with a healthy dose of government action to make sure things like public safety and social support are taken care of. We can actually think of this spectrum in different stages. Okay, so with the absolute minimal level of government intervention, you've got a pure free market. Now add some moderate regulation, save for consumer protection, and you get something like market capitalism, what you see in the US. Get even more substantial with intervention for social services, and you arrive at a welfare economy. And finally, when the state itself becomes a dominant economic player, well, that's what we call state capitalism. Now, this whole spectrum thing isn't just theory, right? So let's take a look at how these different models are actually applied in some of the world's most prominent economies. First up, let's talk about a model that gets a ton of attention: welfare capitalism. You've probably heard it called the Nordic model because it's what you see in places like Sweden, Norway, and Denmark. And believe me, it tries to strike a very specific and politically very complex balance. So the whole idea behind the Nordic model is to get the best of both worlds. On one hand, it has a really competitive, private, market-based economy. But, and this is a big but, it also has very high taxes to fund a massive social safety net. We're talking universal health care, free education, generous public benefits, the whole shebang. It's this constant balancing act between keeping the economy efficient and making society fair. And to make it work, you really need high levels of social trust and broad political agreement. Okay, now let's pivot to a totally different approach: state capitalism. This is where that line between government and business becomes, well, incredibly blurry.
In this system, which you see in places like China and Russia, the government isn't just a referee blowing the whistle. Oh no, it's one of the most powerful players on the field. The state actually owns key industries, like energy and banking, and it directs the whole economy toward its own national goals. That might mean prioritizing geopolitical power or super-fast development over pure profit. And politically, it's a model that tends to thrive where a single party has a firm, long-term grip on control.
Of course, you can't have a conversation about capitalism without talking about its main ideological rival. This brings us to one of the great debates of the modern world: capitalism versus socialism.
And when you look at them side by side, the core differences are pretty stark. Capitalism, as we've said, is all about private ownership and market-based decisions. Socialism, at least in its classic form, is about the opposite: collective ownership and central planning. So where one system champions individual profit and competition, the other champions social welfare and cooperation. I mean, they really represent two fundamentally different visions for how a society should be organized.
And this debate has been raging for centuries, really defined by these two towering figures. You've got Adam Smith on one side, the champion of the free market, and Karl Marx on the other, its most famous critic. You could say their ideas basically built the intellectual battleground that still shapes our political world today.
All right, so we've explored a lot of different models and big ideas. So what's the bottom line here? What are the essential things you need to remember? Let's recap.
Okay, if you take away nothing else, remember these three things. Number one, capitalism is a spectrum, not some single, rigid idea. Number two, almost every modern economy is mixed. That idea of pure capitalism is really just a theory, not a reality. And number three, this means the real political debate today isn't really if we should have capitalism, but what kind of capitalism we want. It's all about where we decide to strike that balance between the market and the state.
And that leaves us with one last crucial question for you to think about. As we face these massive 21st century challenges, things like climate change and growing inequality, this whole debate over finding the right balance is more urgent than ever. So, what do you think the right mix is for the future?